Hey everybody, I'm Aaron Hale. Welcome to today's workshop on Medicare turning 65. And so what I want to do is I just want to take a moment to introduce how Medicare, original Medicare works, and then how these supplemental plans work along with prescription drugs. I also want to cover what Medicare doesn't cover because that's very important. You need to understand that. And then I want to tell you a few stories at the end, if you can hang in there, just some experiences that why you may want to pick up the phone and call me so that we can go over your situation just to make sure that you're doing it correctly. So, what happens in our country when you turn 65? Well, some of us are retiring for the very first time, we're drawing Social Security, and most of us go on Medicare. And you'll notice I say most because some of you watching this video may be currently working and you have health insurance at work or your spouse does, and so you're on a group plan. So I want to kind of go over how to understand Medicare if you aren't one of those people, and then how you should buy your supplement. And then at the end, I want to go over if you are currently working, let's discuss that so that you understand what to do. So to start off, let me just say that there are a few important things you need to know. First of all, Medicare or original Medicare has two parts, Part A and Part B, all right? And people say, okay, Aaron, I'm eligible for Medicare, I'm turning 65, I get it for the first time. What does that even mean? Well, if you ever go to the doctor or the hospital in the future, it's as simple as Part A and Part B will pick up 80% of the tab. So in a perfect world, if the bill's $100,000 and you have hip surgery, then you know your Part A and your Part B will pick up 80%. So then it says, okay, well, how much does all this cost me? So for most Americans, as long as you or a spouse worked for 10 years in our country, then Part A is free. And so in all my years of meeting with thousands and thousands of people, I've only met one person that had a Part A premium. So for most of you, it's going to be free. If you don't, you just have to pay a premium every month. It's pretty expensive, so hopefully that's not your case. Part B, everybody in this country has a Part B premium, okay? So I joke with some of my clients, say your worst enemies right now are your friends and family. They'll say things and confuse you. So just so you're aware, everybody in America pays a Part B premium. And that premium is based on your tax return from 2 years ago. So the government, in its infinite wisdom, a few years ago came out with what is known as means testing. And what that means is they do a 2-year look back on your tax return. And so you look at your tax return from 2 years ago, whenever you're aging in, and so at the bottom right, you look at your AGI. If you're single and you made $85,000 or more, or you're married and you made $170,000 or more filing jointly, then you will pay more for your Medicare. And so just to kind of give you a range on Part B premiums, it's going to be somewhere between $130 a month up to about $430 a month. And so you can see that if you're a higher income earner, you're going to pay a whole lot more for Medicare than in the past. And this is per person. So if you're married, you will both pay that. So good news is you don't stay there the rest of your life. So in the next calendar year, let's say your income fell way off because you just retired or you had sold a piece of property or a business, you just need to know that you will revert back down to what is known as the base rate. Okay, so you got your Part A, your Part B. How do you pay your Part B? If you're on Social Security when you turn 65, they'll just take it out of your Social Security check once a month. But if you get to 65 and maybe you're delaying your Social Security, maybe till full retirement age or even past that to age 70 because you're trying to maximize your Social Security, what you will do is you will have to proactively sign up for Medicare about 90 days before your effective date, at which point, now that you're in the system, they will send you a bill and you will pay that quarterly until you do go on Social Security, at which point then they'll start taking that premium out. Okay? So Part A free, Part B is based on your income. The part that I help most of my clients with is this section, okay? So if we're worried, if 80% is covered by Medicare, how do we cover the gaps in Medicare? All right, you have three options. Number one, don't do this, but you could pay cash. The reason you don't want to do that is there's just no cap or limit on this. So this could easily be $1 million over time. The two most common ways people solve this problem is A, they buy what's known as a Medicare supplement or Medigap, which is the same thing, or they enroll in something called Medicare Advantage. So I can't make this any easier. The way I would describe this to you is think PPO, think HMO. So I'm going to put HMO below Medicare Advantage. Are there some PPO Medicare Advantage plans? There are, but the most common plans are the HMO plans. If you like doctor flexibility, you want to be able to go wherever you want, not worry about pre-authorization or referrals to specialists, or you have a second home and you travel a lot, most likely you're more like a Medicare supplement person. And then when people see these rates on these plans, it's really not that bad because it makes sense. It's only covering 20%. So the premiums aren't sky high when you're turning 65. Think in the range, and it depends on your gender, your zip code, your tobacco, but somewhere around $100 to $150 a month, you can buy some of the best health insurance money can buy. The two most common plans people buy are Plan F and Plan G. Okay, as I record this video, you can buy a Plan F, but you just need to be aware that in the year 2020, Plan F is going away. And here's why. You probably have a relative like I do. Do you have a relative that just goes to the doctor like it's a social visit? Well, the problem is if they have a Plan F, they have no copays, no deductibles, no coinsurance, so they can literally go to the doctor as much as they want and they get no bills. And I don't know what else to say, but we're drowning in healthcare debt in this country. 2016 alone, it was $3.3 trillion. It's hard to imagine when you sit there and think about that. So the federal government is going to do away with Plan F and make Plan G now the Cadillac plan. And the only difference, just so you know, is a once a year deductible of $183. Now you need to understand that this number is a dynamic number, and so it changes from year to year. It could go up and it could go down. But what the federal government wants now is that if somebody's going to the doctor or the hospital, they want you to have some skin in the game. And so they think that that will limit people using the Plan Fs, basically like social visits. Either way, it's not bad news. Sometimes when I tell people, oh, Plan F's going away, they get all worried, like, oh, the best plan's going away. It's not a big deal. Plan G is just as good. It covers the entire 20%, just like F does, except for this $183 deductible, which isn't bad. In today's world, some of these deductibles on group plans or individual plans, you know what I'm talking about, they're $2,000, $3,000, $4,000, $5,000, $6,000 just for the deductible. What if you go to a doctor, and I usually use like a high-end facility like a Mayo Clinic as an example, and they charge more. They charge 115% because they can, and they don't accept what's known as Medicare assignment. You can feel good about an F or a G because not only does it cover the 20%, it covers anything over, which is known as Part B excess. Okay, so if you buy a Medicare supplement to complement Part A and Part B, you also need to add what is known as a prescription drug card. This is very simple. You do this one of two ways. Either A, you take no prescriptions when you get to 65. If that's the case, we just put you on the cheapest drug card. There's no reason. You have to have one to avoid the Part D penalty, but you don't have to have an expensive one. So we put you on the cheapest plan. If you take any prescriptions, we just use Medicare.gov. We shop out all the plans in your zip code, and we put you on the best one. I heard a stat once that 75% of all Medicare beneficiaries are actually on the wrong Part D card. So don't do that. Some people fall victim to, well, I bought company ABC for my Medicare supplement, so I'll just get my prescription drug from the same company. Do not do that. You don't have to have the same companies, so you can have your health insurance with company A, you can have your Part D with company B. Let's save you the most money we can. All right, let's just say you're an HMO person, and you're like, Aaron, a network of doctors, a network of hospitals doesn't bother me. You just need to know how these plans work. The draw to these, for a lot of them, is they have what's known as a zero premium. It's not free, it's just a zero premium. You still have to pay your Part B premium to Social Security or to Medicare every month, but in addition to that, it's zero. But in trade-off is you have to go to certain docs, certain hospitals. You need to know that there's pre-authorization and referrals to specialists. And when you're in these major metropolitan areas or a big city, it's not a big deal because some of these doctor networks are very vast, they're large. And if you don't like the Medicare Advantage plan you go on, you can switch every year during what's known as annual enrollment period or AEP. If you go Medicare supplement, one of the big misnomers is, well, I can only change during AEP. That's not the case. So if you buy a Medicare supplement and 2 years down the road, another company has a cheaper rate for their Plan G, you can switch any day of the week. You need to know you have that kind of flexibility. So if the premiums of about $100 to $150 a month at 65 doesn't scare you, you're probably a med sup because you like the doctor flexibility and you can travel. If you're drawn to the zero premium HMO, then you can go on one of these Medicare Advantage plans if there's one available in your area, and there might be multiple ones. All right, so let me give you a few stories just to make you pick up the phone, set an appointment, and talk to me. So a couple of years ago, I had a gentleman come see me, and he worked for a small company. And he said, "Hey, Aaron, I'm still working. I probably don't need a Medicare supplement plan. I might just decline Medicare in its entirety." And you can do that. So if you're currently employed, you or your spouse, and you work for a very large company, 20 or more employees on that group plan, you can decline Medicare in its entirety. However, you might consider taking Part A because it's free, and that might enhance your group plan at work. However, just know that if you have a high deductible plan at work and you have an HSA, a health savings account, you can't do an HSA and Part A at the same time. So that's the only caveat to that. So if you don't do an HSA, you could sign up for Part A and enhance your hospitalization benefits with your group plan. However, what if you work for a smaller company like my guy did? He worked for a small company. They had about 18 employees. If you work for a company that has 20 or fewer employees on the group health insurance plan, Medicare is still mandatory. And so you don't want to goof that up, because if you're supposed to be on Medicare and you didn't sign up, A, they could start running a penalty, but B, what a lot of folks don't realize is that their secondary coverage doesn't work because Medicare becomes primary. And so let me give you an example of that. I had a gentleman come in to see me, and he got a severance package when he turned 64 from one of the big companies. And part of that severance package, he got COBRA. Well, during that period of time of his severance package, he turned 65. And if you didn't understand what I just said, COBRA, in the eyes of the federal government, is not known as credible coverage. And so let me give you an example. So let's say this gentleman retires, he's got his severance package for a few years, but in the middle he turns 65. And after his 65th birthday, he has a heart attack. And he's got to go in. They want to do emergency surgery on this man. He's got to do bypass. You know how this works, right? He gets out of the hospital. All of a sudden, here comes all these bills. And he come to find out, he thought the whole time he was good because he had his COBRA. But because COBRA is incredible coverage, Medicare Part A and Part B is mandatory, his secondary in that situation, or in his mind, his COBRA, doesn't work at all. And so he gets to pay cash for that mistake. And so what I want to encourage you to do is to set an appointment regardless of your situation. Give me a call so that I can at least ask you a few questions and make sure you're okay. And if you're not, then we want to be able to help you, put you on the right supplemental plan, the right prescription drug coverage, so that you have this great retirement and you know all your health care is covered. I want to thank you for tuning in today. I'm Aaron Hale, and I can't wait to chat with you. Thank you.